I've spotted something in Arweave. 558 days in the Ascended channel, we've managed to get the breakout. I'm not only going to show you what I'm looking for in Arweave, I'm going to show you how you can identify when there's going to be a trend change and a change in momentum. And here we have the Arweave chart trading against USDT, and you can see 558 days in this range. We've managed to pop our head up, and that shows a signal that the bull's regaining some form of momentum. So before we get into analysing Arweave, we're going to go through a little bit of a tutorial with you guys so you can know how to identify when there's something happening in the charts and when there's a likely change. We all know the basics. You're creating a higher high, higher low, higher high, higher low, higher high. That's a bullish trend, and what's happening in this bullish trend is you're creating new ceilings and new floors. In a bullish trend, we're breaking the ceilings, and that ceiling is acting as support going forward. So you can see that here. Simply, this is what we're looking for in a bullish trend. We're looking for price action to come back down, retest previous resistance as support, and continue the move up. That's a bullish trend. Let's do the bearish one now, and then we'll go into the Arweave chart. So the bearish trend, you're creating a series of lower lows, lower highs, lower lows, lower highs, lower lows. Now, what's happening here? How can you identify it when there's a change in momentum? It's when you take out the previous lower high. So what we need on Arweave is to take out this previous high, close above, act as support, and then continue its move to the upside. And what that tends to do is create what we call a head and shoulders pattern. So the reason why these are high probability moves, head and shoulders patterns, is because the psychology behind it is that if the bears had regained any kind of momentum, they would have put a lower low in here. But you can see we've got a higher low, and the bulls have got some form of confidence. The bulls are interested here, and the bulls are fighting. The tug-of-war battle starts here. The bears need to come down. The bulls need to go up. So once we break the neckline of the head and shoulders, the bulls have regained momentum. The trend is likely to change. So that's one of the reversal patterns that we can look out for. We need to take out the previous high. So the high that we need to take out on Arweave is this high here, sitting at $13.85, nearly $13.86. So that's what I'm looking at. The positive is we've taken out this high here. This is the main high. We've taken out this high. We've got some form of momentum. We've managed to break through a diagonal trend. We've come back. We've retested this diagonal trend. And what does that allow for? Tight stop losses, guys. Tight stop losses. We educate appropriate risk management on this channel, and we want to know when we're right and when we're wrong. When we're wrong, we don't want to be losing much capital, but when we're right, we want to be gaining that capital. So if you had a trade from where price action currently sits at support up until the previous resistance level, which is this previous high here, that's a 54.45% gain to the upside. And if you're looking to take out these previous highs, there's not much resistance here, guys. We're looking at higher levels, but to be conservative, that's my price target on Arweave, $13.85. So don't forget to subscribe to the channel, guys. Check out my meme coin playlist that I've just created at the request of the community. Goodbye from me.